The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 17th day of July, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live training room. So in order to get into that broadcast, you have to be one of our traders or taking the 1-week free trial. When Michael joins us in about an hour, to give us a recap of the live training room and do a little live trading on the TradingView platform, he'll walk you through the process of signing up for the free trial. Now, you get 5 consecutive trading days with access to everything. We treat you just like a passport holder for 5 consecutive trading days so you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, today's Thursday, so your trial will officially start tomorrow, and it'll run all the way through close of business next Thursday. In fact, it's a great time to take the trial because you'll have the weekend to kind of get familiar with the indicators. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, at 12 noon Eastern. Now, unlike the morning broadcast, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But if you're new to our little corner of the world, it's a great way to get to know who we really are. Again, thanks to the power of YouTube, you can actually see how we've evolved over the years, from whence we began to where we are today. youtube.com/CFRN. This is our schedule for each afternoon broadcast, so we're going to dive right into our daily devotional. And we're starting a new topic today, how to read the Bible. I know what you're thinking. I know how to read the Bible. Do you? Well, that leads to another question that we'll get into. How often do you actually do it? Oh my, we just had a new recap come in. So, I'm going to have to ask you to bear with me for a moment so that I can update this. It won't take long. Sort of a surprise. I wasn't expecting that. But thank you very much, Valerie. I do appreciate it. So, almost there. Almost there. Ah, done. Okay. Kind of like the old days. All right. So, topic of our devotional, we finished, living in community yesterday. And that was very good. If you're a believer, you want to learn how to do life together with fellow believers. Today, how to read the Bible. This is day 1 of 5. We're going to talk about going deeper by meditating on Scripture. There's a significant difference between Bible reading and Bible meditation. Reading the Bible can involve merely seeing or even saying out loud the words on a page without pausing to ponder what they mean. Too often the goal of Bible reading can become simply checking off a box, even seeing how quickly we can get our reading done in order to move on to something else more important. There is nothing more important. If we're not careful, we can approach Bible reading the way we go through a fast food restaurant. We're focused on getting in and getting out, and our expectations for food quality are fairly low. But meditation is different. Meditating on the Bible involves thinking about what we're reading and reflecting prayerfully on what it means. It's more like sitting down for a fine meal. Your focus is on enjoying every bite and soaking up the ambiance, because you know this food will not just strengthen you, it will satisfy you. God calls us to not just read His Word, but to meditate on it day and night, as we read in Psalm 11:3, and we see a similar picture in Joshua 1:8. In fact, let me share that psalm with you. Psalm 1, verses 1 through 3, from the NIV translation. Blessed is the one who does not walk in step with the wicked, or stand in the way that sinners take, or sit in the company of mockers, but whose delight is in the law of the Lord, and who meditates on His law day and night. That person is like a tree planted by streams of water, which yields its fruit in due season, and whose leaves do not wither. Whatever they do prospers. That ought to make you want to meditate on the Word. So, where do you start? My first encouragement is for you to identify a daily Bible reading plan. Instead of just opening the Bible to different places on different days, I strongly encourage you to find an intentional way to walk through all of God's Word. Multitude of options exist that are used by other followers of Jesus, or you can create one on your own. Again, it's not random reading, like just closing your eyes and opening the Bible, and wherever your finger lands, that's what God wants you to read today. It's kind of like the I Ching, and that's not what we're trying to achieve here. I would also encourage you to get a good study Bible that uses an accurate translation of Scripture. Remember, the Bible was not originally written in English. Hebrew, Aramaic, and others. A study Bible contains notes for different verses that help you actually understand the context and meaning of what you're reading. It's also wise for us to receive counsel from brothers and sisters in Christ who have studied the history, culture, and original languages of the Bible, far more in depth than we have. And let me just be clear. The King James Version, which some people swear is the only Bible, okay, it was written in the King's English. Now, I assure you, not in the Old Testament and not in the New Testament did anyone speak in the King's English. The these, the thous. In the New Testament, Jesus talked to the disciples in just everyday, ordinary language. Think about that. If all you've ever read is the King James Version, there's a very storied history about how that King James Bible came to be. I encourage you to study that as well. Regardless of which Bible translation or reading plan you choose to use, set aside a regular time in your day, or maybe multiple times in your day, morning and evening, as Psalm 1:2 talks about, to not just read, but to meditate on God's Word. How do you meditate? By listening and looking. Let's pray. Heavenly Father, today we ask that you would teach us to meditate on and delight in your Word day and night, as we trust you to sow it deeply into our hearts and into our minds. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Thursday. Speaking of Thursday, tonight is the members only workshop, 8 p.m. Eastern. So please, if you're one of our traders, have your questions ready so we can hit the ground running. Okay? And again, I'll do my best to get us started as close to 8 p.m. Eastern as I possibly can. All right, here's the numbers from around the world, starting in the U.S. with the cash markets, or the indices as they're called. The Dow's up 174 points. The Nasdaq's up 168, which is pretty close to 1%. S&P 500 is up 29. The Russell 2000 is up 28. That's over 1.25%. And in the commodity basket, crude oil is up 71 cents, trading 67.09 last. Now that's a gain of over 1%, or $720 per contract traded. We got the crude inventory numbers yesterday. They were expecting a draw of about 1.8 million barrels, I believe it was. But when the actual numbers came out, it was a draw of well over 3 million barrels. So if you're wondering why crude oil is up today, well, now you know. Gold is down $17.60, trading 33.4150 last. Silver's up 13 cents, trading 38.25 last. I'd sure love to see us break $40 next week. My target's 50 and beyond, but remember, silver has been to $50 twice in history. Once when the Hunt brothers tried to corner the market, and they did a pretty good job until they went bankrupt. And then, not too many years ago, we hit it again, just from natural causes. Now, important prices, important areas are almost always tested. So I really believe that this time, when we test 50, we're going to break through. My hope is that on the retracement, 50 will hold as support. It's been resistance twice in history. This time I'm looking for it to become support. In the Asian markets at the close, the Nikkei rose 237 points. Shanghai rose 13. The Hang Seng fell 18. And in the European markets at the close, FTSE up 46. The DAX up 361. That's over 1.5%. And the CAC up 99. That's over 1.25%. So we had a mixed day in Asia. It was a green day for the UK. And so far, it is a big green Radio Thursday here in the US of A. And I think we're deep enough into the green that we will most likely close in the green. So those are the numbers. Let's take a look at the global news. Syria's government and Druze leaders reached a new ceasefire yesterday. The announcement came after Israel launched dozens of airstrikes into the country, striking the military headquarters in Damascus and an area near the presidential palace. Israel says its campaign aims to defend Syria's Druze population, that's D-R-U-Z-E, and keep Syria's military and Islamist militants from its borders. Tit-for-tat attacks between Druze militias and Bedouin fighters in Syria's southern Swida province have killed more than 300 people in recent days, according to a local war monitor. The fighting among religious minorities and Israel's involvement poses the greatest threat to date for Syrian President Ahmed al-Shara. Separately, an Israeli-backed aid group accused Hamas of spurring a stampede yesterday that killed at least 20 Palestinians near a food distribution site in central Gaza. And of course, Hamas has denied the allegations. Now, this was supposed to be news from around the world, but we're going to step outside of planet Earth. Kinda. Mars rock breaks record. The largest piece of Mars on Earth sold for nearly $5.3 million at Sotheby's yesterday, the most valuable meteorite ever auctioned. The rock weighs 54 pounds. The segment was discovered in November of 2023 by a meteorite hunter in Niger's Agadez region of the Sahara Desert. The rock has a distinct Martian reddish hue and is partially composed of glass, 21.2% by volume, and believed to have been forged from the heat and pressure applied to Mars' surface when an asteroid struck it, propelling the chunk 140 million miles through space. It has the scientific name NWA 16788, referencing its discovery in Northwest Africa, and was validated as a Martian rock in the leading journal for meteoric science earlier this year. Martian meteorites are rare, composing roughly 400 of the more than 77,000 officially recognized meteorites. Most meteors burn up as they enter Earth's atmosphere, with remnants largely landing in the ocean. Let's go to Wall Street. How about those econ numbers today? I can't wait to see how they spin that. It was just a blowout all around, in a positive way. And as a result, U.S. stocks advanced on Thursday, filtered through a fresh wave of earnings, but stayed wary of the next move in President Trump's campaign to oust Federal Reserve Chair Jerome Powell. How many times does Trump have to say, "I don't plan to fire Jerome"? He has asked him to step down. He has called him the worst Federal Reserve governor in the history of America. But there's a real grudge match going on, and who's paying the price for that? Me and you, and other American taxpayers, and people who want to get a mortgage or buy a car. The major U.S. indexes are consolidating near record highs as investors navigate a plethora of catalysts, including earnings, economic data, Trump's tariffs, and the president's displeasure with the Fed's stance on interest rates. Jerome Powell is not going to be remembered fondly by history. There's all kind of articles out there saying, "Oh, Jerome's the bomb." Come on, really? Coca-Cola. When I was a kid growing up in Georgia, you were either a Coke family or a Pepsi family. We were a Coke family, Coca-Cola. But I had one aunt and uncle. They were a Pepsi family. I used to love to spend the weekend at their house when I could. They had sort of like a mini farm inside of the city. They had chickens and ducks and goats, and I could go out in the morning with my aunt and gather the eggs. But I knew all weekend we'd be drinking Pepsi. And I never warmed up to Pepsi. Now, I no longer drink soda pop, but I've always been a Coca-Cola man. Yesterday, President Trump took to social media saying, "I have been speaking to Coca-Cola about using real cane sugar in Coke in the United States, and they've agreed to do so." Now, the last time Coca-Cola fiddled with their recipe, which is stored in a safe in Atlanta, Georgia, things didn't go well. Remember the new Coke? It didn't take long before they went back to the original Coke. In a statement posted online, Coca-Cola said, "We appreciate President Trump's enthusiasm for our iconic Coca-Cola brand." Trump's a Coke man. More details on new innovative offerings within our Coca-Cola product range will be shared soon. The company is set to report quarterly earnings on July 22nd. Shares of the company were little changed by the news early today. Pepsi, on the other hand, is up 7%. And I have a PepsiCo news article that explains that. We'll get to it in a minute. Some Federal Reserve policymakers are not budging from their view that rates should remain where they are, despite the incredible economic news that we have, the blossoming economy that we have, because they just don't like Trump. Federal Reserve Governor Adriana Kugler and New York Fed President John Williams both made this argument in speeches delivered this morning and last night, citing the risk of inflation pressure from tariffs. Now, we keep hearing that, but where is it? With the unemployment rate still at historically low levels, elevated short-run inflation expectations, and goods inflation rising due to the upward pressure from tariffs, just stop right there. The CPI came in 0.1% higher than the analyst expected. But you haven't heard him say a thing about the PPI numbers that came out yesterday, because they proved that there is no inflation. So they can't talk about that. That's not part of the hate Trump narrative. Kugler said, "I judge that inflation is likely to increase further." How can it increase further when it hasn't increased? In fact, inflation is lower today than it was when President Trump took office. At some point, they're going to have to admit the truth. Just like they did about the Russia collusion, just like they did about Hunter's laptop, and so many other things. What else we got? Uber is betting big on robotaxis, with a pure-play electric vehicle maker Lucid as its partner. The two companies, along with autonomous tech firm Nuro, announced this morning a next-generation premium global robotaxi program, exclusively for the Uber platform. The new robotaxi program would outfit the Lucid Gravity SUV with Nuro's driver Level 4 autonomous software deployed on Uber's platform and fleet management systems. Uber says the goal is to deploy 20,000 or more Lucid EVs equipped with the Nuro driver over the next 6 years. Okay, 20,000 taxis over 6 years. Nobody's getting excited about that, including Uber shareholders. Uber is down on the day. You think this news would have pumped up the jam? Lucid's up 41% on the news. And you might want to look at it because it's trading at $3.23 a share. The Lucid EVs will be owned and operated by Uber or its third-party fleet partners, and the service is expected to launch next year in a major U.S. city yet to be named. A Lucid robotaxi prototype using Nuro software is already being tested at Nuro's Las Vegas proving grounds. And again, Lucid stock is now up 41% on the session. But it's not too late to get in. I mean, we're talking about a $3 stock here. From Reuters, a U.S.-based Wells Fargo banker who works in trade financing has been blocked from leaving China after traveling there recently. This was reported by the Wall Street Journal. Chen Yu Mao was subjected to an exit ban after she entered China sometime in recent weeks, according to the report. The U.S. banking giant has suspended all travel to China following Mao's exit ban, according to the report. We're closely tracking the situation and working through the appropriate channels so our employee can return to the United States as soon as possible. The ban could worsen concerns among multinational companies about the risks of doing business in China, particularly around employee safety and freedom of movement. The incident could also chill corporate travel to the country and complicate relations between the world's two biggest economies. Now, this lady was born in Shanghai. She's based out of Atlanta, where she serves as chairwoman. Before her election as FCI chair in June, Mayo served as the vice chair of the body. She's been a banker at Wells Fargo for over a decade, according to her LinkedIn profile. She currently serves as a managing director at the lender and spearheads its international factoring business, as well as advising multinational clients on cross-border working capital strategies. If you don't know what factoring is, it's a financing method where companies sell their receivables to third parties, such as banks or private investors, in exchange for immediate cash. The third party, known as the factor, profits by purchasing the receivables at a discount and collecting the full amount later. They're not giving any reason as to why they've blocked her from leaving China. Apparently, she found out something they don't want the rest of the world to know, I guess. And so if we're going to talk about China, let's talk about Russia. Russia's largest lender, Sberbank, that's SBER Bank, wants to offer custody services for Russian cryptocurrency assets. This is a state-owned bank. Russia's central bank has softened its opposition to cryptocurrencies, backing a law last year that let businesses use them in international trade to help skirt Western sanctions imposed on Russia over its conflict in Ukraine. The executive director of Sberbank's Alternative Payment Solutions Division said the bank had sent proposals to the central bank on the regulation of crypto assets in the country after seeing more and more banks elsewhere start to provide custody services. And don't forget, it is Crypto Week on Capitol Hill. This is what the cryptocurrency industry has needed for years. And as soon as we got rid of No Claire Gary Gensler, the SEC chairman, we're starting to see things move in a very positive direction. From Bloomberg, oil was steady in London as traders weighed supply disruptions in Iraq against a strong rebound in the dollar. And we will look at the crude market here in a bit. From Reuters, the SEC and Elon Musk have again agreed to give the billionaire more time to respond to the regulator's civil lawsuit, accusing him of waiting too long in 2022 to reveal his large stake in Twitter. Once you own more than 5% of a company's outstanding stock, you have to notify the SEC that you have become what's called a beneficial owner. In a filing in federal court in Washington, D.C., the SEC and Musk said they have agreed to give Musk until August 29th to answer or otherwise respond to the lawsuit. He was due to respond by tomorrow, July 18th. The SEC has said Musk's 11-day delay in disclosing his initial 5% Twitter stake let him buy more than 500 million of the company's shares at artificially low prices, at the expense of unsuspecting investors. Musk later renamed the social media company X after buying it. I guess they haven't heard that him and Trump split up. PepsiCo shares are soaring in trading today. How much? Show me. Yeah, up almost 7%. The beverage and snack food giant affirmed its outlook and also posted better than estimated quarterly results. The maker of Pepsi Soda and Doritos and Cheetos reported adjusted earnings per share of $2.12 on sales of $22.73 billion. Analysts surveyed by Visible Alpha had expected $2.06 and only $22.35 billion, respectively. So PepsiCo surprised to the upside. The CEO went on to say, our international business momentum continued while our North America business improved their execution and competitiveness in key subcategories and channels. While North American revenues rose 1% year over year, volume dropped by 2%. I have to do the math on that, I guess. So that's the global news. That's the Wall Street news. Let's do the local news. Logic 247. That's our 24/7, around-the-clock E-mini alert service. It's not just E-minis. It's also crude, gold, and silver. We're currently in week 363. Over the last 363 weeks, we have issued 20,069 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders. Now, for 363 weeks, I've always said 20% or less. The actual number is closer to 12%. But we want to stay humble. Valerie just did this recap at 12 noon Eastern. So it is completely up to date. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 69 alerts so far this week. 2 never triggered. One of them was a duplicate, my fault. I forget what happened with the other one. We're still waiting on the outcome of 12. That gave us 55 actionable alerts, of which 4 or 7% would have been stopped out, again, based on simple market structure and a very simple process that we teach all of our passport holders. Now, the real purpose of the logic alerts is to teach you how to read the chart. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So, yes, you can trade them. I guess I couldn't stop you if I tried. But what I really want you to do is use them to learn how to properly read a chart. If you're going to trade for a living, it's not going to happen until you're able to read a chart. Now, just like the devotional today that was about how to read the Bible, and you think, well, I already know how to read. Yeah. Well, the thing with charts is there's no words, no sentences, no paragraphs, no punctuation. It's a different language, and you got to learn to read it and speak it. as I will do as we go through the individual markets today. Now, 363 weeks is a very long time, but many years before there was a Logic 247, we had our original alert service, the concierge trade alerts. And they're different in a number of different ways. The logic alerts all have an entry price, an initial target, additional targets, and then a final trade to price. The CTAs are just targets, and they don't come out around the clock. Typically, they come out 5 minutes before the Globex open. I didn't think I was going to get them out before the open last night because I had a mentoring session that ran long. So normally they come out at 5:55. Last night I was 3 minutes late, but I still got them out 2 minutes before the market opened. And the open was pretty quiet, so it didn't really cause any problems for anyone. Now, what this means is that all of our traders and even our trial members had all of these targets 2 minutes before the market opened last night. So as we go through the individual markets, keep that in mind when you see these targets drawn on the chart. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. If you are one of our traders, make sure you read this information and that you understand it. If you don't understand it, ask so I can explain it to you. Okay? All right. Let's go to the charts. We'll start with the S&P 500, the bellwether. And we're up against all-time historic highs, but we got red and falling overhead. Now, is it possible the price could break through red and falling? Oh yeah, it's possible. But we're now in our 11th day of sideways consolidation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Is that unusual? Well, look at the chart and you tell me. Now, the BBC has continued to rise, as I said it would, if we continued to consolidate sideways. Got a very bullish day going. If we're going to pop through the all-time high and hit that 62% fib extension, traders should take advantage of today to do it, because otherwise we're heading back to the BBC. The green line, it's called the BBC, stands for bull-bear cross. When price crosses below the green line, we're bearish and expect lower prices. But when price crosses back above the green line, we're bullish and expect higher prices. Now, price always reverts to the mean. No matter what strategy you use or methodology, or maybe you just wing it and trade with your gut. How's that working? Seriously, I'd like to know. Now, what do I mean by price always reverts to the mean? Well, in our case, the mean is green. We call it the BBC. And price always moves in legs, whether you're looking at a 1-minute chart or a monthly chart, and anything in between. You get a leg and a retracement, a leg and a retracement, a leg and a retracement. Then, April 24th, when price crossed back above the BBC, first pullback held, and the second pullback held. Then the third pullback held, and the fourth pullback held. And we're due for a pullback, but my concern is that there won't be room for a pullback because price, or the BBC, is rising to meet price. And that creates a very different dynamic. Now, the reason we start with a daily chart every day is I want you to learn to use the daily chart. Institutional traders, the ones that actually move price because of the size they trade in. They look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you to spend 2 minutes with the daily chart of whatever you're going to trade before you drop to the smaller time frames and actually start putting on and taking off trades. It's pretty obvious that the institutional traders have been buying today, but they ran into resistance right where we expected. Now this is today, Thursday. This is Wednesday, Tuesday. Where do we find resistance? At red and falling. Where we find resistance today? Red and falling. Again, I'm not saying we can't trade through it. The markets are super bullish right now. But by spending 2 minutes with the daily chart, you get a free look over the shoulder of the deep pockets that move price. And if they're buying, do you want to be selling? If they're selling, do you want to be buying? Well, I guess that's a decision you'll have to make. You're also able to identify major areas of support and resistance days, weeks, even months in advance. Of course, that's going to require you learning how to actually read the chart. Now, the 30-minute chart is where all the trades are created, both the Logic 247 trades and the concierge trade alerts. These windows are from a mentoring session I did yesterday. I posted them in the discussion group last night. I figured I already drew them, so I waste them. As you can see, this long window filled and this long window filled. You had a green candle that entered the window, and then when this 30-minute candle opened, it filled the window and then some. 63.30 up to 63.34. That's 4 points. You only need 2 points to get your goal for the day. This was a 2-point window. Now these short windows down here, those will remain valid until triggered. Could be days, could be weeks, could be months. But until price actually enters those windows, they're still valid. The market opened last night right here. This was the opening candle. And again, all of our members and trial members had these targets, the CTA targets. See, the logic alerts, those are actual trades. An entry price, an initial target, additional targets, and a final trade to target. We opened and came down to the weekly trading zone and the BBC. Remember, the pullback holds more often than it doesn't. Red and falling turned to blue and climbing, and we ran up and filled that window and then some. When the market runs into resistance, go look left. Price will typically retrace back to the BBC or find some other support area. So we had support at the BBC, which sent us back up to the long target again. Well, actually, we didn't make it on the first move. But just look at this one candle right here. It opened at 63.01 and it ran up 10 points. You only need 2 points to get your goal for the day. So if you caught that move, you had a week's worth of points in 30 minutes. Resistance sends us to support, which sends us back to resistance, which sends us back to support, which sends us back to resistance, which sends us back to support. And we found resistance just above the top of that window of opportunity I drew yesterday in the mentoring session. The step line looks like it wants to cross to the right side of blue and climbing, as it did here. When the black step line crosses blue and climbing, That's an indication that price is most likely going to retrace back to the BBC. In most cases, it does. And it did. So up here, if price consolidates sideways or continues to drop, step line is going to move to the right side of blue and climbing, and you should expect a retracement back to the BBC. Now, it's possible the market could find support here at the weekly zone, 6320/21. And we could consolidate sideways there, and if we do, the BBC will rise to meet price. On the Dow, this is where we opened last night. Came right down to the BBC, the pullback held. And then we got a little bump an hour ahead of the London Open. And this high, right here, you see this double top we had right before the close yesterday? That's resistance, right? Times 2. So if you're long this candle, you should be expecting resistance here. Now, if it trades through it, that's fine. But you should at least be expecting resistance. So you either take your profit or you trail your stop very closely. This candle opened at 425 and ran to 474. It's 49 points. It takes 20 points to get your goal for the day. Resistance sent us back to support, which sent us back to resistance. You see this high here is identical to these two highs here. So we go back to the BBC for support, and then we get a leg, a retracement, and a leg that takes us through the long target. We spike the zone, which is 650/55. But look where we closed. Below it, below it. Here we may have closed a little bit above it. What was the closing price here? 665. Yeah, so we closed 10 points, but look what happened in the next candle. Completely reversed that move. The step line is trying to cross blue and climbing, so look for price to continue lower to the BBC. Then it becomes a question of where the pullback will hold or not. The pullback holds more often than not, but eventually it will trade through. We know that. So we wait for price to get there. Then we determine whether it's holding or not. How do you know? Well, if it starts, once you get the pullback, if you start printing green candles, that means it held. If you drop below it and start printing red candles, that means it didn't hold. It's pretty simple. From zone to zone. Now these vertical lines separate today Thursday, Wednesday, back here's Tuesday, etc. And these are the weekly trading zones that are published every Monday morning at 6:15 a.m. Eastern. We've published the zones for the last 15 and a half years. And they have worked wonderfully for us. That's why we keep publishing them. I've had a lot of traders tell me they wouldn't think of trading without them. So Monday morning, 6:15, you have a chance to get them on your chart before Wall Street even wakes up for the week. Now this zone, for instance, is 44,415/420. I used to put both lines on the chart. Now I just put one. Because once you're around a minute, you'll know. Plus you have your own zones. So you can put both lines if you want. Or you can just put the one line like I do. I like to keep my chart as clean as possible, so there's not a lot of distractions. Looks like that red candle really wants to come back to the BBC. That step line looks like it really wants to cross. The Russell. Here's where we opened last night. Dropped to the BBC and the weekly trading zone. When price encounters a weekly trading zone, only one of three things happens. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. Like it did here. However, on a slice, most of the time, when the move runs out of steam, price will retrace back to the zone it sliced through and continue in the direction of the slice. So where do we have resistance on the Russell today? At the zone, 2268/69. This is Thursday, this is Wednesday, this is Tuesday. Now, right here, you have a bearish cross. That's where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance, at least the first time up. So we hit the resistance, came back to support at the zone, and now we hit resistance at the zone. And because the step line is crossing blue and climbing, we're anticipating a retracement back to the zone and most likely back to the BBC. The euphoria of that news starting to wear off a little bit. But the NQ is still quite bullish. This was the opening candle last night. We consolidated for hours at the zone. And then 2 hours before the London Open, the Russell took off, hit the long target. This candle opened at, we'll call it 2309, at 6 points. I'm sorry, this is the NQ. Yeah, 6 points at $20 a point. No, that's not right. Let me do that again. We opened at 23,087. So that would be 13 and 15. It's 28. 28 points at $20 a point. But as you can see, it kept going to the zone. When price moves up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. People often ask, can you just trade zone to zone? Yeah, you can. Price is always trying to get to a zone. Does it always make it? No. But if price is above the BBC, you know it's trying to get to the zone overhead. When price is below the BBC, you know it's trying to get to the zone below. Below. We've taken out Tuesday's high by just, well, more than a little bit. And the NQ actually still looks bullish. Now the step line is directly above blue and climbing. But if we consolidate for a couple candles, that thing's going to cross. And then the NQ is going to follow the other markets back to the BBC. Then it becomes a question of whether the pullback holds or not. Crude oil. This was the open last night. And by 8:30 Eastern, we had hit the long target. Resistance sends the market looking for support. Now we had a bullish cross right here. It led to an extended move. So the first time price revisits that area, we expect it to be good support. And it was. Support sends us to resistance. We spiked the long target the first time, or the second time up. Took out these highs by just a little bit. We're always suspicious of just a little bit. Then as we moved below the BBC, we were unable to take out these lows. So that's bullish. And that sent us back up to the long target a third time. And now we're at the zone. 6740/45. Where's your next resistance? 6765. And then 6795. And then the zone 6815/6820. Trade every market exactly the same. Now we'll talk about gold when I come back. As you can see, the zones published Monday morning at 6:15 a.m. Eastern. Look where the market found support today. Look where it found resistance today. We'll talk more about that when I come back. Michael's here. He's going to give us a recap of what happened in the live training room this morning. Then do a little live trading on the TradingView platform. I'll come back, finish the recap, and wrap things up with our good word for the day. Michael, if you're ready.
All right, my mic was off. I am here and I'm ready. Okay. Go. This one over to here. Like that. All right.
Okay, let me get you centered. There you go. All right, looks good.
All right, here we go. Yeah, I struggled today. All right, well, let's get into this. Good afternoon, everyone. Today is Thursday, the 17th day of July, 2025. If you have not taken a free trial lesson, you want to, go ahead to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button, and it will bring you to this registration page, where all that we ask for is your name, your email, your phone number, and down at the bottom, make sure you give us your TradingView login ID right here. Okay, if you don't give us that, you won't be able to get the indicators indicating on your charts. You need to give us that. And really, there's only two indicators. Got to get them indicating on your charts, right? Give us that little bit of information. We'll get them indicating on your charts. Okay.
Before you get going, can I interject one thing?
You sure can.
So the first words out of Michael's voice when he took the charts was, we kind of struggled today.
Yes.
Now, how many places have you ever been where they actually admit they had a challenging session? Mostly they're just pounding their chest, telling you how great they are. But the way we do things, the live training room, that's real trades with real money and real time. And you see the results right before your eyes. We don't sweep anything under the carpet. That's why so many of these places come and go, because they sweep so much stuff under the carpet, they eventually trip and break their neck and disappear with your money.
You've been around almost 20 years now.
Yeah, we're celebrating, CFRN celebrating our 20th year anniversary. And our training room has been in existence since 2008.
So, yeah, 2008.
We've been around a minute. Okay.
Yes.
All right. I just wanted to point that out, because we don't try to hide anything from you. I mean, we're the first to tell you we don't know what's going to happen next in the market, and you will get stopped out, because we want you to stop chasing that holy grail that promises you'll never get stopped out again if you buy this indicator or take this course. That's just a bunch of hooey, and you already know that. So, all right.
It is, and you should know that by now. Hopefully you're not chasing your tail like that, but
Hopefully.
if you are, stop with us. Most people do stop with us once they get in with us, then they stop with us. They don't go anywhere else. We had our first customer, our first client from way back then until he died. So he stayed with us until death. That kind of says a lot.
It does.
All right. Well, my results today, but I was just finishing this up here. Yeah, give us your TradingView login ID. If you don't have one, click on this link to go get one. All right. That's all you need to do. When you send us that information, we'll get your indicators indicating on your chart. Now, today, it was right down to my very last trade. I picked up 13 ticks on gold to get me to positive number. Otherwise, I would have had a blue day. I was really thinking I was going to get a blue day, because there was an NQ trade that I didn't take right at the end that worked out. There was an NQ trade right after that I didn't take that worked out. But they were all right after the bell. Well, my bell, my inner bell. that goes off at 11:25. But today minus 31 on the NQ, and I don't know if we were ever positive on the NQ today, were we? No, we were never positive on the NQ from the start. We're negative on the NQ. We never made the positive numbers. The Russell, we started out positive, then we got negative, never made it back. So we're at the low of the day on the Russell. We're at the high of the day on gold. 33 was the high of the day on gold. -6 on the ES. That is not the low of the day. That's actually the high of the day. -6 is the high of the day for the ES. Today, though, and this is important, it took 3 minutes and one trade to get the goal for the day. I was up $1,000 with 10 contracts at that point, or $100 with one contract. And I ended with 5, so 27 more trades, and I ended with $5. And you know, after commissions, that was a big negative number. But this is gross numbers we're talking about here. So the gross monthly profit, that's what it says right there, is $5 more than it was yesterday. We're at $9,680 over 12 business days, and this number went down, averaging $806 per contract per 2-hour business day, and on the year, we're under $65,145 over 121 business days, and this number went down, averaging $1,364 per contract per 2-hour business day. And if you're doing the 24/20 blueprint, this number went up today, right? Because if you're doing the 24/20 blueprint and you quit trading when you get your goal for the day and you add 1 contract a month, so far this year you'd be on your 7th contract and you would have only worked 15 hours this year, and you'd be averaging $5,013 per hour. You'd be up $75,537, averaging $5,013 per hour gross. Okay, that number went up because we got the goal for the day on the very first trade after 3 minutes. That was a gold trade right there, too, I think. So I had a bunch of stop outs. I had stop outs in every market today. We'll start out with the gold. The gold is where we ended up getting. Also, let me just put this out there. I switched tactics a couple times toward the end of the session. I did the really super aggressive trades toward the end of the session because we just weren't getting the pullbacks fast enough. The markets weren't moving fast enough. We were going to run out of time. So I went to the super aggressive trades, and that's what these off-color arrows are. You know, the off-color yellow arrow, that was a break even using this right here. I went long as soon as it went into the oversold. I ended up with a break even. This one right here, I went short as soon as it went into the overbought and took profit. This one right here, I went long as soon as it went into the oversold. I took profit. When you're doing the super aggressive stuff, you totally disregard the YVR. Okay. Now, let's go back to the beginning here on gold. Okay. We started out, this is where we got our goal for the day, our very first trade right here. Now, I said 3 minutes, but I guess from the start to the end of the trade, when this bar closed, it was at 9:30. So we took 10 ticks profit on that one. Then we had a break even. Then we stopped out. That put us at -5 on the gold. Then we had a +8. That got us to +3, I think. Oh, we had a +10. That got us to +5. Okay, and then we had a break even and a +3. That got us to +8. And then a +5. That got us to +18. And then, +13. And then a +7. That got us to 20. And then right at the very end, this one right here, 11.23.5. We got a +13. That got us up to $5. We had a break even in there too. There wasn't a whole lot going on after that today, right? I think after all the crazy volatility we had yesterday, people were sitting on their hands a little bit today. The Russell, we ended up negative on the Russell. We were positive though after our first trade on the Russell. Okay, we were back here. This was our first trade on the Russell. Now the Russell was just running this one and it wasn't pulling back. That's why we didn't have any trades. All right, even if I did the super aggressive stuff, there were no trades using the super aggressive stuff either. Right, so it just ran and finally it pulled back here and we grabbed this one for 11 ticks. And that's where we were positive on the Russell. That's the only time we were positive on the Russell. Then we stopped out here. That put us at -4. Then we stopped out here and that put us at -19. And that was it. We didn't have any more trades there in the Russell. Even use the super aggressive stuff. It didn't make it into the oversold. It wasn't alone. It didn't make it into the overbought. It wasn't alone. It wasn't alone. Right here, I guess it would have been right here. If I'd have done that, that would have stopped out. I didn't notice it. That was right. That was during the break. But it was a challenge. It was not easy trading out there today. Definitely one of the days you would have wanted to quit when you got the goal for the day. Now the ES, This is the whole ES right here. The whole morning on one screen. We started out negative on the ES. We had a -10 right there, and then we had a +4. That got us to -6. That was it on the ES. And I don't feel like I missed a lot here on the ES. You know, if we're doing the super aggressive stuff, I wasn't doing that until like the last half hour. I think maybe the last 20 minutes. I wasn't really doing the super aggressive stuff till then. But even doing super aggressive stuff, there would have been a short right here. There would have been a long right here that would coincide with this, except it would have been an aggressive long. We would have waited for the up close, but they're in just about the same place anyway. There would have been a short right here that would have been break even. There would have been a short right here that would have stopped out. And that was during the break. So we wouldn't have anything really doing the super aggressive stuff. We wouldn't have anything else. So the ES, we ended up with -6. Now the NQ, we were negative all day on the NQ. We were trying to get back to positive. I was trying. See, since there's some blue arrows in there. But oops. But we started out right here on the NQ. And I was -25 after that one. And if I'd have done the aggressive on that one, I would have been buying the open of this bar instead of buying the close. I'd have been buying the open. So we would have definitely taken some profit doing the aggressive on that one. I won't talk about the aggressive until we get to the part where I was actually doing it, though. All right. So I don't inundate you with information that's not necessary. So we had a -25 on that. Then we picked up 4 ticks there, got us to -21. And I believe at this point I was saying, well, it's no big deal. You know, we're only a few minutes in. We have the rest of the day to get this, and the rest of the morning session to get this fixed. Then I stopped out again. And that put me at -46. Then I got a little bit back here. It put me at -38. I get a break even. Then I stopped out again, and that put me at -63. Then I got a little bit back there. That put me at -59. Then a little bit more there put me at -31. 31? 15. Oh, 51. Sorry, -51. And then a little bit more there put me at -39. We had a break even and a break even. And then it changed directions on us. And then here we got to the aggressive stuff. I took an aggressive short there that put me at -31. Then we had a break even, aggressive break even, aggressive break even. And I don't have the aggressive long trade that we took at the end. The aggressive long trade that we took at the end was right here. It was right here. When this got into the oversold, it was right here at the last minute. That was the aggressive long trade that we took. And let me just make that the right aggressive color. Right, that was the aggressive long trade that we took, and that gave us 13 ticks and put us at +$5. Now, let me just show you what the aggressive looks like, okay? When the blue goes into the overbought by itself, you sell the open to the next bar, regardless of what's going on with everything else up there, okay? Regardless of this stuff. Okay, when the blue goes into the overbought by itself, you sell the open to the next bar. When it goes into the overbought by itself, you sell the open to the next bar. When it goes into the oversold by itself, you buy the open to the next bar. Now that looks like it'd be a stop out, but it went 19 ticks before it came back down. And this one looks like to be a stop out, but it went down. It went down about 15 ticks before it closed up. Okay, so they would both have been profitable trades. This one right here, you'd buy the open to the next bar, and that one would have been stop out. But that's it. That's his doing the super aggressive stuff, and that's what I had to resort to, sadly, because we just weren't getting any movement. You know, we were getting a lot of sideways stuff, and this aggressive stuff works great. It works great in sideways chop like that. And it would have been long right there, short right there, short right there, long right there. All of those would have been good trades. I screwed stuff up at the very end. Gold, I made a mistake on the gold at the very end. And I was at this point on the gold when I did this one right here. I only needed 9 ticks at that point. I needed 9 ticks at that point to, I think it was this one right here where we went into the oversold. I needed 9 ticks at that point to get to positive. And I got in the trade and it went 5 ticks into profit. And I went to put a profit target on it at +9 ticks, but I accidentally clicked in the wrong place and it doubled me up. And then I went to hit break even on it and it took me out of the trade at break even. So I ended up with a break even on 20 contracts right there. And then I had stopped out on the Russell as that was happening. I think it was the Russell that I stopped out on at the end. Pretty sure. Straight on the Russell. This right here. I had stopped out on the Russell, so I had to make up for all that. And I didn't think I was going to do it, honestly. I didn't think I was going to make it. If this gold trade right here hadn't gone 13 ticks, I had a target at 13 ticks. If it hadn't gone 13 ticks, if it had taken me out of break even, we wouldn't have made it today. We would have had a blue day. But it all worked out. You see this right here? This is an aggressive long trade right here. All right, this would be the blue led into the oversold by itself. You could have bought the open of that bar right there. That'd be aggressive long trade. Now the conservative long trade is going to be to buy the close of this bar. Right, you're buying the close of this bar. You see the midpoints right there. So bouncing off the midpoint's stabilized. So you want an up close off this bar for the conservative trade. Okay, and that should make it appear to the prior swing high. But the aggressive trade, this went into the oversold by itself. So you would have been buying right here at the open. You would have been buying right there at 44.5. Okay, so you stop would have already gone to break even on it. All right, just want to point all that out. Now, for anybody that's coming on right now, if you have not taken a free trial, let's go here to mytradingq.com, click on the purple button, no credit card required. It's going to bring the registration page, fill it out. Down at the bottom, make sure you give us your TradingView login ID. Okay, simple as that. Now, we have, so the aggressive trade would have been here from 44.5, right? And the conservative trade would be an up close on this bar, would be conservative trade. Nothing else is giving us anything right here, right now. Right? Does everybody understand everything that I'm saying? You know, I'm going to go through a little bar by bar stuff. We'll leave the gold here because that's the only one that actually gives us a trade. But let's just go, and we would the up close would be 44.3 up to 45.3. Okay, so an up closer at 45.3 would be a conservative trade. Okay, so I'll put the order on, and then I'll put window on top. Oh, it just closed up. Okay, so we just filled on it. So here's our conservative long trade. Now, I'm going to hit always on top on that. We can watch this. If it goes 5 ticks into profit, when it gets up to 5.8, I'm going to bump the stop to break even. The yellow has to hit 5.8. I bump that stop to break even. Okay. But what I wanted to do with you guys was this. Let's go through this in a little bar by bar analysis. Okay. So the only thing you really need to pay attention to, now we'll start out, we'll just do the conservative to begin with. Okay. I know some of you guys really like this stuff when it goes to the bar by bar thing. So I'm gonna do that for you. I'm gonna get rid of the super aggressive and we'll just do the conservative trade. All right. The thing you need to look at is down here in the slingshot. Right? It's 118, by the way. Saying that, Dwayne. So if you go back and make a recording of this, sub recording and mini recording. The thing you look at is down here, right? Because the trigger has to go either in the overbought or in the oversold, depending on what direction you're trading, to give you a trade. You're not going to have any kind of a trade until it does one of those two things. Now, all the conditions around that happen after the fact, right? So right here, it's gone into the oversold. So you're waiting right now. If it's gone into the oversold, you look where price is. Price is pretty close to the midpoint. So when it's oversold, you need it to hit the midpoint and give you an up close to pull it out of oversold. Right? So at this point, I would be thinking, okay, well, I'm just going to wait for an up close. And because these are range bars, and I know how big every bar is going to be, I can say when this bar begins, I can say the bottom is here, the top is going to be here. I can put my buy stop limit on right there ahead of time. All right. So you wait for the up close, that happens, and the up close brings it up to the midpoint in the trigger, right? The midpoint in the trigger. Now, the next bar, once you're in, should bring it up to the overbought in the trigger, right? And there it is, it brings it up. So this goes enough right here to get your stop to break even. So in my scenario right now, I would have entered right in here, somewhere right in there, and I probably would have got my stop to break even on that, right? So the next bar goes down a little bit. Let me bring it up here like this. The next bar goes down a little bit. You're still in the trade. Even if you didn't get out of break even, you're still in this trade so far, right? The next one goes up. So now your stops at break even again. If you didn't have a chance the first time, your stops at break even now. And the next bar opens and starts moving down. Now you made it into the overbought right here, just barely, I think. Yeah, you see it just barely made it into the overbought. We got to bump our stop over here. You made it into the overbought. I'm going to lock in one take a profit on this because, as I said, it's been challenging today. You made it into the overbought. So now that it's in the overbought, continued up closes are going to make it go flat in the overbought, right? Continued up closes will make it go flat in the overbought. And that would be okay if you get that. But you don't know what's going to happen next. So, you trail your stop. You had it break even at least right now, maybe plus a tick or two. And the next bar, it closes down, but it's still, if you had it at break even, that probably would have taken you out. If you had it plus one tick, it would have taken you out. All right. So it runs up, it gets into the overbought. Now it needs to get down into the oversold. That's all you're looking for right now. You're looking for this to get down into the oversold. Okay. Still not in the oversold. You don't care about what's happening right now up there because it's not down in the oversold. You only care about it when it gets down in the oversold, and it's gonna be something you need to take action on. Okay, we're almost down in the oversold, but look how far away from the midpoint we are. So right now, you know that the next bar is not going to make it to the midpoint, right? Just get out with one tick over here because these are 9 tick range bars. So this bar is at 35.3 and the midpoint is down here at 33.9. So there's 14, 15, 16 ticks. I'm sorry, 14 ticks in between those two. So you know it's not going to be at the midpoint on the down close. So you know the next bar isn't going to be the trigger, but the one after that could be. Right? If the next bar closes down, I don't know if it does. Oops. Yeah. But if the next bar closes down, I don't know if it does. Nope, it closed up. So you're farther away from a trade right now. Okay, so right now I'd be saying you're at least 3 bars away from a trade. Okay, because if the next bar after this one closes down, that might put you into the oversold. It might not, but you're gonna need the bar after that to hit the midpoint, and then you need the bar after that to close out of the midpoint. Okay, but the next one closed up, so you have nothing. Now, see, you just keep watching this down here because this is what's gonna let you know when you need to trade. All right. So now another down close is going to put that into the oversold because your first down close here, your next down close will put you right here. You're nowhere near a trading position, right? Nowhere near a trading position. So you let it go down. It's in the oversold now. Look where you are. You're nowhere near where you want to trade. Now you could be aggressive and take a trade right here when it goes into the oversold. You're above the YBR. You're on kind of a run. You could be aggressive and take the open of the next bar if you want to. If you were doing the super aggressive stuff, you wouldn't be doing that because the black is down there with it. All right. But being conservative, you're going to wait for it to get down to the midpoint. All right. So that one closed down too. All right. You're not down at the midpoint yet. The next bar could hit the midpoint and give you an up close. The very next bar could hit the midpoint and give you an up close. And that would be a trade you'd want to take. Do you see that? Because price is at 36.2, the midpoint is right here at 35.3. So the next bar has the potential to go down here and hit the midpoint and give you an up close. If it does do that, then that's a trade you want to take. Okay, do you see that? It didn't do that. The next bar gave you an up close and it didn't hit the midpoint. So that's not a trade you want to take. You want to leave that one alone. It's going to reset the midpoint as it comes out of the oversold. This right here, where it comes out of the oversold, is what tells it to reset the midpoint. Okay, you're above the YBR. It says when it comes out of the oversold, you reset that midpoint. That's what happened over here. You're above the YBR, it comes out of the oversold, and resets the midpoint. Okay. All right. So that goes up. Now you're waiting for it to get, again, just focus down here. It's got to get down into the oversold for you to have a trade. This is the first one. Now the next down close could put you in the oversold again, right? It wasn't a down close, it was an up close. It brings the midpoint up to the bottom. That's not a trade. Okay, so now you're looking for the same thing. Now the next down close, it must have hit it because I got a blue arrow in there. But the next down close is the one that you're looking for to get to the midpoint, right? And it gets to the midpoint. So now that it's down, well, it doesn't get to the midpoint. You're at this point right here. So this again is important, right? You're not at the midpoint, but you're in the oversold, or you're down at the oversold, right? at this bar. And so the next bar could hit the midpoint, give an up close, and that's probably what happened. That's why I have the blue arrow. Let me move that over. The next bar at this point, because you're in the oversold on this down close, the next bar could have a wick that hits the midpoint and closes up. And that would be a good trade. That's where you want to get in, right? And that's what happened. The next bar had a wick that hit the midpoint and it closed up. And I took that trade right there on the up close. Right now, I don't know what I got out of that, but if you look at it, it went up and it went up, and it went up. Enough. This is gold. So, right, it is gold, yeah. So from here, where the up close was 38.1, it ran up to 39.5 for 14 ticks or $140 a contract. All right, the next one comes right back down and it does it again. It hits the midpoint right here and it gives you an up close off the midpoint. So you could trade that. It doesn't look like I did, but you could trade that. And if you did, it would have given you some more profit right there. So this was the first one that I did, right? And this was the second one right here. I think, no, this was the one I did. I'm sorry, this was the one I did. Was it? Yeah, I think this was the one I did. That is true, right? So yeah, because this is the one I did. Yeah, because this one didn't hit the midpoint. Okay, so I'm still looking at the same thing down here. So we're not at the next one yet. Right, I put it back in the wrong place. Here we go. So now you're looking for it to come down and hit the midpoint again. Okay, you have a little space right here. You got an up close, need a down close, and then another down close is what I'd be saying right now. There's the first down close, and you need another one to hit the midpoint and give you an up close. Okay, you got the down close. It's through the midpoint. Now the next bar, think about this. Right, and this is what I'd be saying in the room. I'm saying, okay, the next bar, if we get an open here at the next bar and it doesn't go down any, if it just goes straight up, then we'd have a trade. If it goes down and it pulls more than 10 ticks away from the midpoint, more than 9 ticks away from the midpoint, you're not going to have a trade. All right. It's important to understand that the low of the next bar cannot be below 38. Right? The low of the next bar cannot be below 38. If the low of the next bar is below 38, then the up close is going to be below the midpoint. So you're not going to want to take that trade. Do you see that? Now in the room in the morning, I'm explaining all this to you as it's happening, like I would right now, right? So the low of that bar is right there at 38, right? You get a down close, the low of the bar is 38, you go sideways. So now you have pretty much the same thing. The next bar, if it goes straight up from the open, if it goes straight up, it's going to be right on, maybe even a little below the midpoint. So it's a questionable trade, right? If it goes straight up, but it does, it doesn't, it goes straight down. So no trade. So those were a lot of words. That was 10 minutes of just like words, or 9 minutes at this point. Let me just explain to you bar by bar what I look for. And when it's in real time, let's just go see what it's looking like in real time. Okay, here it is in real time. So this one right here came down, got the up close right there. It moved up a little bit, put in a little bit higher swing. Right now, a down close on this bar will put you right about here, right? Down close on this bar will put you in the oversold. It'll put you above the midpoint. A down close on this bar will put you above the midpoint. So it's going to take at least 2 bars to get a trade. All right, there it is above the midpoint. Okay, so now this one, if it goes down and closes back up, it's not going to give you a trade. It's got to give you a down close. All right, to get this into the oversold, it's got to give you a down close. If it gives you an up close, you have no trade. If it gives you a down close, you're in the oversold. You can trade on the next bar. Do you see it? I mean, I know it's a lot of words, but the thoughts, if you don't say the words out loud and you just do the thought process, it's not that hard. Need a down close on this to get it in the oversold. Then you need an up close on the next bar to get the trade. That's as simple as it is. Okay, if we get a down close on this, we know exactly what we're going to do. Right? So let's just put this thing together. Get that always on top. Hopefully we get the down close right here, and we can go through this step right here all together. Down close should stick this down in the oversold, and then we'll take the trade. Run out of time. Come on, give it to us. There's nothing really jumping out here on the downside. There it is. Okay, so now 9 ticks above the bottom of the bar. We're in the oversold. 9 ticks above the bottom of the bar. You got 45.1 at 10 ticks, sorry. 46.1 is what you're going to buy. Now it's going to be 46. Let's just check this right here. Oops. The low of the bar is now 45. So 46 is what you're buying. That's where my thing is right now. I believe. Let's put this window on top. Okay. So you see ahead of time everything you need to do. The low of the bar is 45. You're going to do 10 ticks away from the low of the bar. Bam. We're in the trade. It closed up exactly where we wanted it to, and it triggered us in. Came out of the oversold. Everything just happened exactly as we thought it would. So now it just needs to give us some profit, and everybody will be happy. That's all you have to do again and again and again. It's the same thing. Okay. This down here resets the midpoint for you to get you in the prime positions to take the trades. And you just got to do click the mouse when you're supposed to click the mouse. That's all. So I don't know if this is going to work out or not. It's looking a little shaky. It didn't really have a whole lot of upward momentum here. But if it stops us out, it stops us out. It hasn't done it yet, but I think it's probably gonna. I want to let it stop us out or get us to break even, one or the other here. Before I wrap it up, I know it's 1:31. Dwayne's probably got stuff to do, so I'll move it over to the side and I'll say this. We're still in it. If you have not taken a free trial of this and you want to, go to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. All right, when you click on the purple button, it's going to bring you to the registration page. Fill out the registration page. All right, once you fill that out, you will be sent everything you need to get into the room in the morning. We only have our indicators on TradingView. So click this button right here to get TradingView. Here's your TradingView login ID once you do that. Right, that trade is still very much alive right now. But my time has run out, so I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
I am. And I'll still make it to my tap dancing lessons on time.
Excellent. Sorry, I ran over.
I'm just kidding. Not about the tap dancing lessons, but no.
That's a real thing, tap dancing.
I know.
We'll actually do that.
Well, here's the thing. People always talk about Fred Astaire and that one other guy that were such incredible dancers.
Mm-hmm.
But think about their partners who had to do it backwards wearing high heels.
Yeah.
Yeah. They don't get the glory like the guys did. Okay, recap of the morning session.
Today it took 3 minutes and one trade to get to $1,000 with 10 contracts.
Sweet. Good job.
You know that bell.
Okay. All right, guys. We shall pick up where we left off with gold. Okay. I posted these windows of opportunity along with the ES from a mentoring session I did yesterday. So I just thought I'd share them because I'd already drawn them, and I posted them in the discussion group, so they got a timestamp on them. But here's where gold opened last night. We're above the BBC, which is bullish, but we got red and falling overhead, which is bearish. And the more red and falling you have, the more likely price is to trade through the BBC, which it did, hit the short target, and then ran into the weekly trading zone, where we consolidated for quite a few hours, and then pull back to the BBC held. Wow, imagine that. And then we dropped, and this is a $500 window on gold. The first move down only gave us $300, but the second move gave us the entire $500 per contract traded. And then we ran into red and falling and the step line, both which can become potential resistance when they're directly above price. That sent us down to the weekly trading zone at 3315/16. And when price drops to a zone, we expect support until proven otherwise. And when price rallies up to a zone, we expect resistance until proven otherwise. Now this zone is 3344/45. So we did tick up and hit the underside of the short target, which will often as it is here, be good resistance. And if we just consolidate for another candle or two, step line is going to cross blue and climbing, which means price is going to drop most likely back to the VBC. Then it becomes a question of whether it holds or not. If it doesn't hold, man, you got a beautiful window of opportunity here. Selling 33.32 down to 33.28. That's $400 per contract traded. Now, if the pullback holds and price starts to rise, just keep in mind you've got potential resistance right here, 33.50. And then at the bearish cross, 33.53. And then again here at 57. And then right here where blue turned to red, 33.60. If we get through that, then you got a 3-point trade up to the zone at 64. So that's the story on gold. And remember, all of our traders had these targets. Usually 5 minutes before the open, but last night it was 2 minutes before the open because my mentoring session ran long. So, got one last market left to cover. Silver. Here's where we opened. We attempted higher, but we didn't quite make it all the way to the long target. But just take this one candle here, okay? You're above the VBC. Got a bullish cross right there. So you should be expecting higher prices. This candle opened at 38.19 and ran up to, come on, that's not right, to 38.25. So that's 6 pennies. So that one candle right there, that's worth $300 per contract traded. Now we ran into resistance here. Not a place I would have typically called for resistance, but you got to trade what's in front of you. Step line crossed, blue and climbing, and down we go. Red and falling took us all the way to the short target. We consolidated there, popped up to the VBC, the pullback held. That sent us down to this low here, which if you look left, right there, see that? But that's going back 1, 2, 3, 4 days. Monday. Get above the BBC, and we just hit the long target. So we hit the short target twice, the long target once so far. Now, look at the step line. It's starting to hook to the right. If it goes from the left side to the right side of blue and climbing, we're already building a red candle. Expect a retracement back to the BBC. Now, let's say price trades through the BBC. You got a bullish cross right here. So that's potential support. It's important that you be aware of that. If we were to continue higher, you got potential resistance here, 38.37. And then again here, 38.48. And then at the bearish cross, 38.55. And then at 38.59. And then the zone. So you never have to worry about, if you're a futures trader, is price going to go up or is it going to go down? Whichever way it goes, it's going to give you opportunity. That's why I encourage you, plan your work ahead of time. Okay? If you were to draw a window of opportunity up here or down here, as price approaches that window of opportunity, grab your range chart and then do exactly what Michael teaches you in the morning. Okay? The bigger picture identifies an area where I call it a window of opportunity, where price should be able to just glide through before it runs into resistance, or in this case, before it runs into support. So all you got to do is sit back and wait for price to approach that area and then go to your range chart. because you don't want to go long if the range chart is telling you you're due for a pullback. Let the range chart do the pullback, and then when the pullback becomes a long entry, boom, you're in. And you ride it up to the top of the window, take your profit. Or ride it down to the bottom of the window, take your profit. With silver, you only need 2 pennies to get your goal for the day. A $1 move, this was a $15,000 move that we had earlier in the week on silver, where it ran from 36.60 to 37.60, that was 5 grand, to 38.60, that was 10 grand, and to 39.60, which became just shy of, it was just shy of a $15,000 per contract move. Now, again, you need very deep pockets to stay in a trade that long. The institutional traders can stay in a trade that long. Again, it has everything to do with account size. So don't trade above your weight class, okay? Just get your goal for the day, put the mouse away, and go do life. Now this high where we poked through the long target, that would be, well, this high right here is basically what the long target was based off of. But we failed to take out this high. That's a sign of weakness. Step line's leaning right. If it crosses over, look for the retracement. Once you get the retracement, it becomes a question of does it hold or not. And whether it does or whether it doesn't, you'll have opportunity in both directions. Now, for those of you that tuned in late, we already covered the ES in great detail. We filled this window from the mentoring session yesterday and this window from the mentoring session yesterday. These windows will remain valid for days, weeks, months, years, however long it takes for price to come back into this area. They'll still be valid. The Dow we also covered in granular detail, and we found resistance at the weekly zone that was published Monday morning at 6:15 a.m. Eastern. The Russell found resistance at the zone. It also found support at the zone. And down here, support at the zone. Here we dropped below it a little bit. And you see right here where the step line crossed blue and climbing? That's an important price, important area. And the market turned up right before it hit it. Now, I went through these in granular detail earlier. So if you're tuning in late, and you want to see the full Monty about an hour after I end this broadcast, you can go to youtube.com/CFRN and see it in its entirety. The NQ step line's about to cross blue and climbing. See how we're consolidating sideways? Be ready for the retracement back to the BBC. I think that will happen before we take out this high. I could be wrong. That's just my thoughts. One last look at the daily. We're now consolidating sideways for our 11th trading day in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You won't see that anywhere else on this chart. 11 days of sideways consolidation. This is a daily chart. This market is wound so tight, we're either going to explode like a rocket to the upside, or we're going to drop like a rock. As this, some people call it coiling. It's just like it's tightening and tightening and tightening. There will be an explosive reaction at some point. Will it be to the upside or the downside? I don't know. Nobody does. I do know that because of this continued consolidation sideways, instead of price dropping to the BBC, BBC has risen to meet price. In fact, yesterday's low lines are right up with the BBC. But that was yesterday. Now we're concerned with today. And we're just off the highs of the session. So how we close today will be important. I don't know what economic news we have tomorrow. But again, the economic news this morning blew away analyst expectations in a good way. And I can't wait for the news tonight to see how they spin it. Because they will. It's what they do. To become a member, go to mytradingiq.com, watch the videos, read the content, and then send an email to support@cfrn.net. Just say, I want to become a member. Valerie will respond with an email that explains what it means to become a passport holder. Number one, you're going to get 2 hours of live training every trading day in our live training room. With Michael putting on, taking off trades, explaining every move he makes, every trade he takes, and the reason why. You get to see the results right before your very eyes. Now, your job is to listen, learn, ask every question that pops into your head, and trade in your demo account so that you can qualify to go live. Becoming a passport holder doesn't mean you automatically start trading 10 contracts like Michael. You don't even start trading one contract live with real money until you pass the test as outlined in the 2420 blueprint, which is designed to help you go from 1 to 20 contracts over a period of 24 months. Now, you may not want to trade 20 contracts because you're going to get a lot of slippage with that many contracts. So while Michael is certainly capable of trading 20 contracts, and we've seen him do it, he's comfortable with 10 because that slippage is manageable. Along with 2 hours of live training every trading day, you get private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance. Over and over again and again, it's a never-ending cycle. It's just how markets work. As a passport holder, you get the Logic 247 alerts around the clock. And we have had, so far, a stellar week. In fact, for those who tuned in late, let me show you where we stand on the week. And Valerie, if you're tuned in, thanks again for getting me out that noon date. Valerie did the recap at 12 noon, just a couple hours ago, or an hour and 45 minutes ago. We're in week 363. Over the last 363 weeks, we've issued 20,069 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 69 alerts, 2 never triggered, still waiting on the outcome of 12. That gives us 55 actionable alerts, of which 4 or 7% would have been stopped out, again based on simple market structure and a simple process we teach all of our passport holders. Now you get the concierge trade alerts. The second they're published each evening. Thursday afternoon, you get an invitation to attend the members only workshop Thursday night. That's tonight at 8 p.m. Eastern. Please have your questions ready. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And last but certainly not least, you get the golden key that opens all the private channels in Telegram. When you're on the trial, you have access to the public channels, which allow you to chat with our traders. Hey, how long you been at this? How long did it take you to learn the strategy? How you doing now? So you don't have to believe me or Michael or Valerie. Talk to our traders. They're the best advertising we have. You'll run into a lot of happy campers. Everything a trader needs, all under one roof. And that's important. All under one roof. One low price. And help is always just an email, a phone call, or a telegram away. Fastest way to reach me about anything is via Telegram. I get buried in so much email every day. You might email me and you think I'm ignoring you. I just didn't get to it. But if you reach out to me in Telegram, I'll see it and probably respond within 5 to 10 minutes if it's during normal business hours. So that's all it takes. Send your email to support@cfrn.net. I'm ready to become a member. Valerie's going to send you all the information you need and the link to click to seal the deal. Okay? All right. Let's wrap it up with our good word for today. Yesterday, we talked about being willing to change, part 1. That means today is part 2. Philippians 3:8. I count all things to be loss in view of the surpassing value of knowing Christ Jesus, my Lord. You must be willing to pay the price for change. American dramatist and screenwriter Sidney Howard remarked, "One half of knowing what you want is knowing what you must give up before you get it." Change always costs you, if not in money, then in time, creativity, and energy. In fact, if it doesn't cost you anything, chances are it's not really change. As you consider how to make the changes needed in your life in order to improve and grow, it's important to count the cost of changing compared to the cost of remaining the same. That means you must do your homework. Change brings growth, but it can also bring grief, especially when it means letting some things go in order to embrace others. What will the changes you desire really cost? Paul wrote in Philippians 3:8-12, "More than that, I count all things to be lost in view of the surpassing value of knowing Christ Jesus my Lord, for whom I have suffered the loss of all things, and count them mere rubbish, so that I may gain Christ, and may be found in him, that I may know him, and the power of his resurrection, and the fellowship of his sufferings, being conformed to his death, if somehow I may attain to the resurrection from the dead. Not that I have already grasped it all, or have already become perfect, but if I press on, if I may also take hold of that for which I was even taken hold of by Christ Jesus." The question is, how badly do you want to change? And are you willing to pay the price? That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.